If you feel like you can't afford a home right now, you're not alone. Home prices and interest rates are high, and most first-time homebuyers feel like they're going to be stuck renting forever. But the truth is, there are real strategies to get around this. Now, I've helped buyers get into homes even when they had little to nothing for a down payment and really didn't feel like they could afford it. But in this video, I'm going to show you exactly how we did it. We're going to break down what to do when home prices feel out of reach, how to lower your monthly payment, and some creative ways that buyers are getting into homes with less money than they expected. And after helping hundreds of families over the last few years, I know exactly what works. And so let me guide you on how you're going to finally buy your first home. So first of all, do you ever wonder why so many home buyers end up becoming house poor? Well, the answer might actually surprise you. You see, it's often because they're following outdated financial advice that more than often sets them up to struggle instead of succeed later on. Now, here's what usually happens when you get pre-approved by a bank for a home loan. You sit down with a lender who runs some numbers and they essentially tell you the maximum that you can qualify for. Based on today's guidelines, they'll likely approve you for a mortgage payment that's anywhere between 43 to 50% of your gross monthly income. Now, that number might sound super official and very trustworthy, but the reality is, following that advice can actually set you up for failure later on. Let me share with you two different examples and how they ended up in completely different situations based on the advice that they followed. The first set of buyers made about $5,000 a month, and based on that, they were approved for a mortgage of up to $2,200. So they went out with their real estate agent and their loan officer and they bought at their maximum thinking that's what they could afford. Well, fast forward a few years later and they were really struggling to make their mortgage payment. Every single unexpected expense, whether it be with their life or their home, really ended up becoming a crisis that they had to deal with. After just a couple of years, they ended up with little to no savings and they were completely stressed out. Now, let's take the second set of buyers. They made just around the same amount of money, but they took a completely different approach. Instead of going up to the maximum that the bank approved them for, they made sure they stuck to a strict budget of only 30% of their income instead. Now, what this meant for them is they ended up buying a slightly smaller home in a different neighborhood than what they really wanted to buy in. But the result was completely different. Not only were they able to completely afford their mortgage payment, but they were also able to enjoy life and actually build a savings on top of it. When things like their car breaking down happened, it wasn't a disaster, it was just a minor inconvenience because they ultimately had the money to pay for it. And because they were able to save money on top of paying their mortgage, not only were they able to enjoy life, but they actually ended up buying a second home and turning their first one into a rental property. Now, this all might sound far-fetched, but I promise you, these are real stories that I see every single day from home buyers. And so what I tell every single buyer that's most important when you're buying your first home especially, is making sure it's one that you can realistically afford. So while the maximum that you could get approved for is anywhere from 45 to 50% of your income, you realistically want to probably be around 25 to 30% at most in order to stay comfortable. So simple math tells us if you make $10,000 a month, you should really be staying closer to a payment of around $2,500 to $3,000 a month instead of the maximum that a lender could approve you for, which is a shocking $5,000 a month. And that's why I tell most of my clients, at least, that before you get pre-approved for a home loan, you should really start with setting out a budget first and start knocking out as much debt as possible to reduce your debt to income ratio overall. You see, knowing your real numbers gives you the power that you need to make a great financial decision. And part of making a great financial decision is often just buying below your means and not getting stuck in an emotional purchase and making a more logical one instead. Now, your monthly expenses are just one piece of the puzzle when it comes to buying a home. As you probably realize, you have upfront expenses as well, the biggest being your down payment. So first, let's tackle the myth of the 20% down payment. Most traditional bankers or financial people will probably tell you that you absolutely cannot buy a home unless you have 20% down because you're going to pay mortgage insurance, and it's just not a smart thing to do. But in my opinion, it's just an old, outdated financial myth that keeps people renting for longer. Now, while it might be true that you definitely need 20% down to buy an investment property, when it comes to buying a primary residence, especially your first home, you can get away with as little as 3 to 5% down in most cases. And if you're using a down payment assistance program, you can even get in a home with 0% down. But doesn't having a larger down payment mean a lower monthly payment? Well, yeah, of course it does. But there's a lot of opportunity cost left over when you're saving every single month trying to get to that 20% down. Meanwhile, the market is getting even further and further away from you. And not to mention, if you're renting, that's even more money that you're spending, or rather wasting, on rent every single month, instead of owning a home that could be appreciating for you over time. Let's say you wanted to buy a $500,000 home. If you waited for a 20% down payment, you would have to save up $100,000. Meanwhile, an FHA loan with 3.5% down only requires a little over $17,000 in order to get in. Now, of course, putting less money down means a higher monthly mortgage payment, but as we talked about, this just means adjusting your budget and the location that you're buying in accordingly in order to make sure that you can realistically afford it. Take, for example, my clients Maria and James. You see, they were paying roughly around $2,000 a month in rent, and they were feeling really discouraged about the market. They only had about $12,000 saved in order to buy a home, and they felt like they were just going to be stuck in this cycle forever, not getting any closer to ever owning a home. Now, after we sat down and explored their options, we actually found a great program for them called the CalHFA Down Payment Assistance Program, which gave them the extra money they needed to get that minimum down payment. And as a result, they were able to buy a $400,000 condo with only $5,000 out of pocket because the program gave them the entire 3.5% down that they needed for an FHA loan. And on top of that, we got the sellers to cover pretty much majority of their closing costs. Needless to say, this was a huge win for them, and they were incredibly grateful that they were finally able to buy a home, which they honestly thought was going to be impossible. You see, for the majority of homebuyers that I'm talking to right now, it isn't sometimes the monthly payment that is their biggest stress, but the fact is they just don't have enough money saved in order to buy the kinds of homes that they want. And so if you don't have the down payment right now, but you can afford a monthly payment, there's nothing wrong with looking into your state's or your local city's mortgage programs in order to see if there's any first-time homebuyer benefits, programs, or grants that can help get you the money you need in order to buy your first home. And if you want to find out if you qualify for any of the programs that your city or state has to offer, click the link below and book a one-on-one call with my team. We'll be happy to help you figure out what programs make the most sense for you and how we can help you set up a plan to buy your first home this year. All right, now I know what you're probably thinking by now. Financing is only one part of the solution, right? But where can I find homes that I can even afford right now, especially if I live in an expensive place like California? Well, here's the truth. If you're struggling to find homes that you can afford, you're probably looking in the wrong places. You see, I get it. When I was buying my first home, I did pretty much what every other first-time home buyer did. I picked up my phone and I started scrolling through sites like Zillow and Redfin, looking at the most perfectly shot, beautiful homes, brand new, because, that's what I really wanted. But here's the thing. That's what every other buyer in your market's doing right now too. You see, when you chase those picture-perfect, move-in ready homes in the hottest areas, what you're really doing is you're setting yourself up to pay premium prices, but because you're going to be competing with the other buyers that are doing the exact same thing. Often, my very first piece of advice to buyers who feel like they're priced out of their neighborhoods is start looking in the neighborhoods around where they really want to be. Usually these value neighborhoods sit just outside of the usual zip codes that most people expect, but in my opinion, these are the ones that are primed for the most growth. Most of the townhomes in the neighborhoods that I was looking at were usually between $650,000 to $700,000. But instead, we ended up finding one in a great neighborhood not too far from where my parents lived for just $500,000. And honestly, this wasn't even that far from the place that we actually wanted to buy in. It was probably maybe a 10-15 minute drive away. And now just a couple of years later, my $500,000 purchase is now worth roughly around $680,000 to almost $700,000 in just a few years. You see, oftentimes the neighborhoods that don't look that promising right now, but might have some signs of growth, right? A new Target or a new coffee shop coming up. Those are the ones that are primed to make a lot of equity gains over time and often have the best value in the short term. Now, another option outside of just looking at different neighborhoods is also just looking at different houses. I get it, we all want the picture-perfect turnkey home that's move-in ready, but sometimes you can get a little bit more value if you get the slightly uglier home on the street that maybe doesn't have all the same upgrades as the one that just got flipped 2 months ago. This is something that my clients Maria and Herman did a few years ago. They were incredibly handy, and it honestly ended up getting them their dream home in just a few years. What they ended up doing is finding a slightly older home that had really good bones, but was in a very desirable neighborhood. You see, since it wasn't as picture perfect as all the other properties, it had a little bit of an older feel to it, they were able to get a really good deal because there wasn't a lot of people looking at this specific home. Now, over the last couple years, they put in a lot of effort into this home, upgrading it with new floors, new kitchens, new bathrooms, you name it, they probably did it. All in all, they probably put around $30,000 to $40,000 of work into this home, but they had got it at roughly an $80,000 discount compared to the other homes that were for sale at the time. And fast forward to today, they were able to sell that home for nearly a $200,000 profit, and they were able to roll that into a now $1.4 million home that they're going to probably stay in forever. Most of the time, a great place to start to find homes where you can get a really good deal on the price is looking at homes that have been on the market for more than 30 days. Especially for those properties that have been on market for a long time in neighborhoods that are usually selling pretty fast. Most of the time, those homes have very motivated sellers, and for whatever reason, their realtor or their home isn't doing a good enough job to get a buyer in there. Those are the kinds of homes where you can get $10,000, $15,000, $20,000, $30,000 discounts on the price or in closing costs to help make that purchase a lot more affordable. So combining this approach, right, looking at different neighborhoods or looking at different properties is a great way for you to save money in an otherwise seemingly unaffordable market. You see, here's the truth. Buying a home in today's market isn't about waiting for the perfect conditions. In reality, they're probably never going to come around. The real key is creating your own personalized strategy. And now you have pretty much all the tools that you need to make it happen. By figuring out what's truly affordable for your situation and looking at different strategies, from looking at different neighborhoods, different properties, or even different financing options, you'll know exactly what you need to do in order to save as much money as possible and make home buying finally something that's affordable. But even with all of these strategies available to them, most buyers still end up overpaying or make crucial mistakes because they don't know the entire process. In this next video, I'm going to walk you through the entire home buying journey, step by step from start to finish. That way you're going to know exactly what to expect, what questions to ask, and how to make sure that you're saving the most money possible for you to finally buy your home this year.